$10 trillion just vanished. Bitcoin crashed, stocks tanked. The Fed, silent. We had the worst single day market drop since the COVID crash, and the damage might not be done yet. Panic is spreading, liquidity drying up like that. It feels like the entire financial system just tripped over a wire, and no one knows what comes next. And now, even the US Treasury is sounding the alarm, raising red flags over debt risks and cracks in banking oversights. But here's where it gets very interesting, my friends. While the world panics, the SEC just quietly greenlit stablecoins, a move that would normally spark headlines. And top investors like Cathie Wood, well, they're scooping up assets like it's a fire sale. Meanwhile, the fear and greed index hit 4. That is extreme fear. Retail is running for the exits, but the smart money, they're seeing opportunity. So what's really going on? Why is the system flashing red while the elites load up? And why might this collapse be the setup of a lifetime? In this video, guys, I'm breaking down what really caused the $10 trillion wipeout that we're calling Black Monday, and why the Fed's silence might be a quiet admission that the system is breaking, and how gold, crypto, and commodities are suddenly looking like the only real escape hatch that's left. Because when the elites stop protecting the system, it's time that you protect yourself. First, let's rewind the clock back to October 19th, 1987, the day the market broke. They called it Black Monday for a reason. In just one trading session, the Dow Jones collapsed by 22.6%, the worst single day percentage drop in history. And the S&P 500 down 20.47%. No war, no pandemic, no terrorist attacks, just pure panic selling, triggered by recession fears and amplified by the rise of automated trading systems. And after that crash, the system had to adjust. And when they added the circuit breakers to stop the markets when prices fell too fast, those emergency brakes today we have, well, they started Black Monday. Let's keep in mind, when fear takes over, it's not just stocks that move, it's everything. And that brings us to right now. Let's start with the pain, because it is oh so painful. Bitcoin just posted its worst Q1 in a decade, when we're supposed to be the best Bitcoin capital of the world, down nearly 12%. Today's massive red candles show that sentiment is collapsing across the board. Meanwhile, the market's fear and greed index closed the week at 4. Not 40, not 14, but 4. This is the lowest I have ever seen. That's panic we haven't seen since the COVID crash in March 2020. But remember, back then, Bitcoin went from $5,000 to $69,000 in just under 2 years. But at the moment, when that actually happened, everybody was running scared, terrified. It feels super familiar. And here we are again. Retail is fleeing. Twitter's screaming, bear market confirmed. Now, while everyone's panicking, Cathie Wood is buying. She just scooped up $13 million worth of Coinbase shares during the drop, one of the biggest proxies for crypto exposure. So ask yourself, what does she see that others don't? Because experienced investors and insiders know something that retail forgets. Fear is often the best time to buy. Now, let's zoom out. Today was a full-blown market meltdown. The S&P 500 posted its worst single-day drop since the COVID collapse. By the end of the week, the index had shed 9.1%, wiping out $4 trillion in value. And since January, $10 trillion in wealth has vanished. And here's the scary part. No one blinked, especially the Fed. No emergency pressers, no whatever it takes from the Fed. Remember that back in the day? Markets just absorbed the loss. We kind of expected it. The sell-off is a crisis of confidence in the Fed, in leadership, in the idea that someone is coming to save the day. And that silence, well, it speaks volumes. But while the chaos ruled the headlines, the SEC quietly made one of the most pro-crypto moves it ever has. They ruled that fully backed, dollar-pegged stablecoins are not securities. That means that they can be minted and redeemed without SEC registration. No big press conference, just a quiet statement dropped when no one was looking. And yet, it worked. No one noticed because the panic was louder. But this is a big deal. Stablecoins are the bridge between dollars and DeFi, the essential infrastructure that keeps the entire crypto economy flowing. And with that decision, the US just said, we want that innovation onshore. We want to own the infrastructure. It's the clearest sign yet that the war on crypto is shifting. And when regulations soften, markets respond. Eventually. While the Fed stalled, Trump moved. He launched tariffs on nearly every major trade partner. The world flinched. Vietnam offered to drop tariffs. Taiwan pledged $100 billion in US investments. Over 50 countries are now renegotiating. Love him or hate him, that is leverage. And when geopolitical power shifts that fast, hard assets like gold and Bitcoin become the safe bet. Just days after Trump's sweeping tariffs were announced, the blowback has gone global. China fired back, slapping a 34% tariff on all US imports starting April 10th. Trump's response? He doubled down. My policies will never change, he said. And now the dominoes are falling. Asian markets melting down. Today we saw the Hong Kong market down 8.7%, Singapore down 7%, Japan down 6%, China 5.5%, Malaysia, Australia, Philippines, all down hard. Circuit breakers halted trading in Tokyo and Taipei. This is when markets fall too fast and they get interfered with and shut down. Even US futures couldn't escape. The NASDAQ 100 futures were down 5.4%. The Dow futures absolutely plunging. Emergency rate cuts now at 26% according to Polymarket. Meanwhile, gold and silver exploded upwards as fear took hold. Gold surged to $3,052 an ounce and silver to 30.76, a massive reversal after hours of early panic selling. All of this, it's just the first wave. India and Japan are scrambling to negotiate new trade deals with US and Europe. Trump says he's not lifting tariffs unless they pay us a lot of money, not just for current trade, but to make up for years of what he calls unfair treatment. And as one analyst put it, this feels less like a negotiation and more like extortion. This is less about trade and more about power. And when systems crack at this scale, the shift to hard money gets louder. While Trump plays chess, Powell, he's stuck. Even he admitted it. Tariffs are bigger than he expected and risk higher inflation with slower growth. That is what we call stagflation, my friends, the worst of both worlds. And Powell, he's waiting, saying it's too soon to decide. Too soon. The markets are bleeding, hemorrhaging. Inflation, it's rising, and confidence is crumbling. This is what happens when the Fed loses control, when every option comes with a cost. Rate cuts fuel inflation, hikes kill growth, and there's no easy way out. And while Powell hesitates, capital is rotating into hard assets, the ones that don't wait for permission to move. And here's the biggest admission of all. The Treasury Secretary, Scott Bessent, just said Bitcoin is becoming a store of value. Let that sink in for a second. That is a US Treasury Secretary, Scott Bessent, of the White House of a current administration. That's not a tech stock. It's not a meme coin. It's a monetary asset. That's credibility. That's legitimacy. And it signals something bigger. Bitcoin is now part of the system. If the people managing America's $35 trillion debt see Bitcoin as a life raft, how long before others follow? While all of this happens, inflation is falling fast. Oil hit 3-year lows. Trueflation, the site that we often reference to show actual inflation, shows that the real inflation currently is around 1.2%. The result? Well, the market is pricing in 5 rate cuts by 2025. Wow, that has jumped up dramatically. Why? Because the Fed has no other choice. They can't justify high rates when inflation disappears. And they can't keep bleeding the markets dry. The tightening era is ended, and the age of liquidity is returning. And here's what no one is talking about. The US has to refinance $9.2 trillion of debt this year. And at current rates, it's a full-blown fiscal disaster. Every 0.01% in interest costs the government $1 billion annually. Let that sink in. That's huge. Now let's cut through the noise. The Fed's not going to cut rates just to help your mortgage. They don't want to do it to ease food prices either. What they'll really be trying to fix is this $9.2 trillion debt bomb. Because if they don't cut rates soon, interest payments will explode. This is already baked into the math. So let's call it what it is. Although rate cuts will boost the economy, they're more about saving the system from a debt spiral. Meanwhile, Trump isn't just talking tariffs. He's planning major tax cuts, the biggest in history. Why? Well, to offset the inflationary bite of tariffs. But there's more. Some analysts are suggesting a behind-the-scenes devaluation of the dollar. Why? Well, because to make imports cheaper without lifting tariffs. In other words, Trump is using every tool to protect the domestic economy while squeezing global competitors. Now let's address the elephant in the room. Tax cuts? Isn't that just for billionaires? Well, not exactly. When businesses pay less in taxes, they reinvest in factories, in jobs, in innovation. Lower taxes free up capital, and capital flows into growth. That's why tax cuts, when paired with smart policy, can ignite selective booms. And crypto? Well, it's a prime beneficiary. Every major financial crisis eventually runs into the same wall: reality. The 1970s had oil shocks and inflation. 2008 had housing and banking collapses. And every time, the solution was more liquidity. And that's where we are again. Tariffs, tax cuts, rate cuts, quantitative easing, they're all just different costumes for the exact same character. Because when confidence cracks, when growth stalls, when debt starts choking the system, printing becomes the one move left on the board. And this time, the numbers are bigger than ever. The system needs fuel. And whether it's injected quietly through repo markets or announced loudly at a podium, it's coming. And when that liquidity floods in, Bitcoin will be the first to sniff it out. Gold will follow. And real assets, like the ones that can't be debased, will start waking up. History is rhyming, and it shows us exactly where it leads. Even if stocks stay flat, even if volatility persists, Bitcoin moves first. It's the most liquidity sensitive asset in the world. When the Fed even hints at quantitative easing, Bitcoin jumps. When rate cuts get priced in, Bitcoin moves before anyone else. And when the dollar starts to weaken, Bitcoin becomes the exit ramp. And now the US Treasury says it's a store of value. The move is underway. Are you early or are you waiting to be told? So while the headlines scream crisis, while the Fed stalls, and while the media floods your feed with fear, you now see what's really going on. This is a controlled demolition, not some accidental collapse. A strategic reset of the system from the inside out. Because whether it's rate cuts, quantitative easing, massive tax breaks, or $9 trillion in debt rollovers, liquidity, it is coming. It has to. The system cannot survive without it. And when that floodgate opens, the smart money won't be waiting. They're already rotating into Bitcoin, gold, and real assets. Because hard assets don't need a bailout to survive. You don't need to guess the next headline if you understand the end game and prepare before the crowd catches on. So guys, the question is simple. Are you going to follow the fear or are you going to follow the capital? If this helped you guys connect the dots, hit the like, drop a comment, and make sure you're subscribed with the bell on, because here we break it down before the rest of the world figures it out. I'm Kyle Chasse. Thanks for watching, guys. Stay sharp, stack sats, and I'll catch you guys on the next one.